Good morning and welcome to another edition of the OFX Currency Couch. Looking back at last week, we saw the Australian dollar shift below a key support point at 75.50, 75.40 on the back of softer third quarter GDP numbers Wednesday and weaker trade balance numbers on Thursday. We now move towards a level around that psychological handle at 75 cents, and where we go from here will depend on a raft of central bank policy decisions upcoming in the week ahead. We look to the ECB, Bank of England and the Federal Reserve as three key G10 counterparts delivering monetary policy updates. We expect the ECB and the BOE will remain on hold with their current policy settings, and we'll be looking to, the commentary that follows those statements for further direction going forward. The ECB will be expected to largely maintain the status quo, while the Bank of England will put focus on the decisions and outlook for interest rate changes going forward. They did raise rates through the policy meetings in the past, and we are looking at possible further increases in interest rates to combat transitory inflationary pressures. If we see a shift in outlook for members McCafferty and Ramsden, then that may suggest some further support for additional hikes and lead to a rally in the pound and a push towards 178, possibly even 180 against the Australian dollar. Of course, the Federal Reserve is expected to raise rates, and with that 90% priced in by the market, we will look to the following commentary and the statement of economic predictions for further guidance. If we see a change in that inflation outlook and growth that supports 2 to 3 rate hikes next year, then we'd expect this US dollar bullish run to continue and perhaps see the Australian dollar move through that 75 cent handle. Any shift that suggests those rate hikes mightn't occur then does lend itself to some possible Aussie dollar upside and a push back towards that 76 level. For further commentary, don't hesitate in contacting our dealing teams.